A company can hold a fortune in one asset and still need cash in the bank to pay its bills. Those two things are not the same problem. Holding Bitcoin on a balance sheet is a bet on the asset. Paying a quarterly dividend on the preferred stock is a promise in dollars. And when the market starts asking whether the promise can be kept, sometimes the company has to show where the dollars will come from. Strategy, the largest publicly traded holder of Bitcoin in the world, filed that answer on Monday, June 22nd. The company sold roughly 2.7 million of its own shares in the week ending June 21st. The sale raised about $336 million. Most of that money went into a cash reserve now standing at $1.4 billion. A smaller slice, about $35 million, bought 520 more Bitcoin. And both moves landed in the same filing. The way to think about the reserve is to look at how mutual societies handled the same tension centuries before anyone minted a digital coin. In the early American colonies, before formal fire departments existed, neighbors pooled money into a shared fund. Each household paid in a little. If someone's barn burned, the pool paid for the rebuild. Nobody pretended the barn and the cash were the same thing. The barn was the asset. The pool was the insurance against a specific kind of loss. Corporate treasuries work on the same split, just at a different scale. The Bitcoin on Strategy's balance sheet is the barn, the long-term asset the company has spent years piling up. The USD Reserve is the pool, a management-designated slice of liquidity set aside since December 2025 specifically to pay preferred stock dividends and interest on debt. The reserve does not replace the Bitcoin position. It sits beside it, because the obligations that come due every quarter are denominated in dollars, not in sats. That distinction is the whole frame for reading Monday's filing. The numbers in order. Between June 15th and June 21st, Strategy sold 2,714,839 shares of its Class A stock through an at-the-market program. Net proceeds were $335.5 million. The company allocated $300 million of that to the USD Reserve, bringing the balance to $1.4 billion as of June 21st. The filing notes the figure includes expected cash from share sales that had not yet settled. Separately, Strategy bought 520 Bitcoin for $34.9 million at an average price of about $67,000 per coin. Total holdings now stand at 847,363 Bitcoin, with an aggregate purchase cost of about $64 billion and an average cost near $75,600. 3 weeks ago, Strategy disclosed its first net Bitcoin sale in nearly 4 years. 32 coins sold in late May for about $2.5 million, with proceeds earmarked for STRC preferred stock dividends. That sale was tiny against the position. Monday's filing is the larger structural move, diluting equity holders to build a cash cushion large enough to keep paying preferred dividends and debt service without touching the Bitcoin stack again anytime soon. The at-the-market program is worth a sentence because it is the mechanism that makes the whole thing work. An ATM lets a company sell new shares into the open market in small daily slices rather than in one giant block. Strategy still had more than $25 billion of remaining issuance capacity as of June 21st. The filing is not a one-time emergency raise. It is a standing tool the company can keep using while market conditions allow. STRC, the perpetual preferred stock Strategy uses to raise capital for Bitcoin purchases, has been trading below its $100 anchor since mid-May. That is the pressure the reserve is designed to absorb. The filing is not a retreat from Bitcoin. It is a recognition that a balance sheet with both a massive illiquid asset and recurring dollar-denominated promises needs engineering on both sides. Strategy still bought coins this week. It still holds more than 847,000 of them. What changed is the explicit size of the cash side, $1.4 billion, up from $900 million at the end of May and $1.1 billion in mid-June. The market's reaction to the June 1 32 coin sale showed how sensitive the signal layer is. MSTR fell about 7% in pre-market on that filing, even though the coin sale was a rounding error against the position. Monday's move is structurally different. It is equity dilution, not coin disposal, but it answers the same underlying question. Where do the dividend dollars come from when the preferred stock is under pressure? Over the long run, the question for every corporate Bitcoin treasury is whether the asset appreciation on the balance sheet can outrun the cost of funding the capital stack that bought it. Strategy is now running that experiment in public, with every ATM sale and every reserve update visible in an SEC filing. The deeper point is that Bitcoin on the balance sheet is not a free ride. Preferred stock pays a coupon. Debt pays interest. Those coupons and interest payments arrive in dollars on a calendar, whether or not Bitcoin is having a good month. A reserve is how a company says, in a filing anyone can read, that it knows the difference between the asset and the obligation. None of this touches the Bitcoin network's own rules. The chain does not need strategy to keep producing blocks. It does not need MSTR to trade at any particular price. It does not need a $1.4 billion corporate cash reserve. The block subsidy is still 3.125 Bitcoin per block at the current epoch. The 21 million cap is still the cap. The difficulty adjustment still rewrites the mining target every 2016 blocks based on measured block times alone. No board vote, no ATM program, no preferred stock anchor. A company can dilute its shareholders to pay a dividend. The network keeps running the same schedule either way. That is the gap between a balance sheet story and a protocol story, and it is worth keeping in view when the headlines treat them as the same thing. So is Strategy going to stop buying Bitcoin? Not likely. The same filing that boosted the cash reserve also records a 520 coin purchase. The company is still accumulating. The reserve build and the coin buy happened in the same week, funded from the same equity sale. The two moves are not contradictory because they serve different layers of the same balance sheet. But doesn't selling shares mean Strategy is giving up? The filing says the opposite in structure. The reserve exists to avoid selling Bitcoin to meet cash obligations. The same logic that made the 32 coin May sale notable as a last resort rather than a strategy shift. Diluting equity to protect the coin stack is a different tool than selling the coins themselves, because coin sales carry a signal cost that equity sales do not. The market reads a coin sale as they needed Bitcoin. It reads a share sale as they raised capital, which is what public companies do all the time. What is the USD Reserve exactly? It is a management-designated pool of cash, first announced in December 2025, set aside for two specific jobs: paying dividends on Strategy's preferred stock and paying interest on its debt. It is not a general operating account. The filing treats it as a named line item, which matters because it makes the cushion visible rather than buried inside a broader cash balance. So what happens if STRC stays below its $100 anchor? The reserve is the buffer. Strategy said it plans to keep replenishing the USD reserve based on market conditions to support the credit quality of its digital credit securities. The $1.4 billion figure is a snapshot, not a ceiling. If the preferred stock keeps trading at a discount, the company can keep selling shares through the ATM program and routing proceeds into the pool. Does dilution hurt existing MSTR shareholders? Well, in the narrow sense, yes. More shares outstanding means each share represents a slightly smaller slice of the company. But in the broader sense, the filing is an attempt to keep the capital stack intact so the Bitcoin position survives. Those two facts can both be true. The trade is explicit. Accept some dilution now to avoid a larger coin sale later that might spook the market harder. So where does this sit next to the June 8th piece on the 32 coin sale? Well, that piece walked the signal versus size asymmetry when a tiny coin sale spooked the market. This piece walks the next layer, funding cash obligations through equity issuance and a dedicated reserve rather than through coin disposal. Same company, same dividend pressure, but a different tool. So as we've said, 2.7 million shares sold, $1.4 billion in the reserve, 520 coins bought in the same breath. Thanks for being here today. Really appreciate your time. The channel will keep tracking Strategy's ATM filings, the STRC anchor price, and whether the reserve keeps growing in the weeks ahead. Subscribe and hit the bell to stay in the loop. One earlier piece on this channel covers the coin sale side of this same story. The June 8th piece on Strategy's 32 coin sale walked how a tiny disposal from an 800,000 coin position still moved the market signal layer. It pairs naturally with this one and it's linked in the description. Stay well. Until the next one.